Welcome back to another vlog. Today we'll discuss KSH International IPO. It is pitched as a power and EV linked manufacturing story. Is it a solid long-term play or a short-term play? What does it actually do? Is it India's largest exporter of magnetic windings? Does it have a strong revenue? We'll uncover all those things and the key risks most investors miss in this review. So please watch till the end so that you can make your final decision. So, what does KSH? What does it do? It's a specialized industrial manufacturing company operating in magnetic winding wire segment, which is a critical component used in electrical motors, transformers, generators, and EV applications. The company holds a strong niche. It's the third largest manufacturer of magnetic winding wires in India and the largest exporter in this category, supplying to both domestic and global customers. And it has advanced manufacturing facilities, focuses on quality driven products, which is essential in this segment. And it is closely linked to power infrastructure, industrial demand, EV growth, making it a cyclical but scalable manufacturing play. When you say cyclical, it depends on the current industry economic growth, on the current conditions, all those things. So it's actually a well positioned niche industrial exporter benefiting from electrical trends and also opportunities. Okay, so in most motors, transformers, EVs, these magnetic winding wires are used, which is very critical. If the economy is booming, these kind of companies also will boom. Next, look at the revenue. If you look at the revenue, which is in blue color, 1056 crores, 1390, 19382, massive increase in revenue. PAT is small increase, 26, 37, 68, but that is also good. PAT is also increasing, but they have a debt of 379.39. So revenue rising, profit rising, but debt is also rising. We have to monitor the balance sheet. But as of now, it's not a loss-making company. It's making profits. It's making everything is going good, but there's a slight amount of debt because it requires a lot of upfront machinery and investment and other stuff. Let's look at the strengths. As I said, right, electrification is going on everywhere. EVs, transformers, motors, this is one of the hot sectors now. And these kind of components are very much required. And it has very good facilities, it has advanced manufacturing facilities. It is one of the strongest niche player. It is also well positioned there. And it has approved supplier to global OEMs with long qualification cycles. Okay. When I say that, it supports NTPC, in MPCIL, RDSO, and leading private entities. It supplies magnetic winding wires. It is trusted by global clients. It is also ISO certified, and it has got awards from Toshiba, GV Power, BHEL, and all those things. So it's a well-known name in the industry. And if you look at the IPO utilization also, right, as I said earlier, the debt is high, but they are planning to put around 225 crore in the debt and buy some advanced machinery for 2 new plants and invest on roof solar plant also, which is also a very good thing. They're investing back to the industry, which is also help them to reduce the debt. If you look at the risk, as I said, magnetic winding wires basically depends on copper price. If there is a volatility in copper price, it would hamper the margins. Forex calculation, since it's basically driven by export, any currency forex fluctuations will also affect. As I said, right, cyclical industrial demand. If there is a slow in the growth in the industry, slow growth, slow adoptions of EV or slow adoptions of like electrical components, it also will get affected. If the opposite, if it grows faster, it is also will grow. Debt level is rising, but they are paying some amount in the IPO proceeds, which is a good thing. Thin margins for errors, and it is dependent on global economic growth and stuff like that, like US India trade wars and all those things might get affected in a small quantity. And customer concentration risk is also there. And I say customer concentration risk, top 10 customers contribute to over 50% of their revenue, and 10 top suppliers contribute to 95% of the raw material. If any changes in contracts and these things will affect, and exposure to copper and aluminum and their price also is another risk which we can see. Total offer is 710 crores, 290 is offer for sale, 420 is for fresh. As I said, they'll be repaying some of the loans and they'll be using for other purposes, funding capex like into new plants. Like, let's look at the IPO details. IPO price is 365 to 384, 39 lots per shares per lot. Minimum investment is 14976. Market cap is 601. The valuations are not bad. It is reasonable, decent to reasonable. Nothing high valuation and such like stuff like that here. Offer opens on 16th, closes on 18th. Allotment on 19th and listing on 23rd. So see, as of now, the anchor book is not out. GMP is not started. Overall market sentiment is positive. Most of them are occupied with ICICI, AMC and other stuff. So listing gain as of now looks uncertain. Okay, but once it comes also, look at these things. If it's not that great, conservative investors who seek like stable and predictable earnings, let's not take a risk. Low risk, income focused investors. Only low risk people should avoid this. Okay, but if you consider to apply, understand the cyclical manufacturing business. If the industry is growing, the demand is growing, this also will grow. And who can track the commodities and industrial demand, those kind of investors can apply to short to medium term. Strong revenue and profit momentum is there, export demand is there, electrification and power sector tailwinds are very good. But only thing is higher debt, copper price and demand volatility is there. But if you are aware of this risk, someone take a risk on this. Even long term, right? 3 to 5 years, there's no problem actually. Leadership, they have like good leadership. They have been in industry from some time. They are largest exporters. If EV comes to adoption, they'll be majorly like benefited from the power and electrification growth also. So if you're looking at a 3 to 5 years range, yeah, this remains favorable. But it's not like buy and forget kind of stock. You have to keep checking because of the cyclical earnings, how the industry is going on, all those things. If you can track long 3 to 5 years also, this will show good growth. So short term, see the GMP, see the anchor book, see the market sentiments, and if you are aware of how things going on in the current industry, you can apply. Long term, it should be good, but it's not a buy and forget stock. Okay, thank you.